Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday the 9th of August. Now markets are still trying to settle down after the significant non-farm payrolls report that was seen on Friday. Payrolls beat expectations across the board on all manner of metrics on the jobs report, and subsequently markets reacted with significant moves through treasury yields moving higher, through the dollar sharply higher, and also a big flash crash actually caused across the precious metals as well. It was really interesting moves that we've seen, and there has been a bit of a bounce back on the precious metals, but is it something that has sustainably changed the outlook for monetary policy opinions for the US Federal Reserve? That is the big takeaway from this payrolls report. Is this the significant progress that the Fed is looking for in order to start to taper the bond purchases? From my opinion, I think it's still going to be December 2021 where we start to see the taper, and I think that pretty much confirms that this is going to be at least that, if not even sooner, if the data continues to be really strong, but I think still December is likely. Now, how does that react to, I think, on the yields front? Well, yields were sharply higher. Now, do they continue to move higher is the question. I think they might start to settle down a bit, and I think subsequently the dollar move may also start to settle down. So we could see a bit of a kickback on that, euro-dollar key levels, and also other major pairs as well. So in terms of the data points to look forward to today, well, we've got the jobs openings, but I think the markets are going to be looking more towards the US inflation data for CPI on Wednesday to be the next big trigger point. We've also got some Fed speakers, Thomas Barkin and Raphael Bostic, to talk about monetary policy today. So generally speaking, I think that we're likely to see a lot of still settling down in markets in the next couple of days. So the charts we're looking out for today, well, we're looking at euro-dollar. Again, the reaction to this payrolls report, obviously key. Can that support that started to build this morning continue to hold? Also on gold, big flash crash to talk about. Where are we looking at for the technicals? And finally on the SP 500 futures, where equities a little bit ticking into all-time highs, but a little bit tentative. Let's see what the charts are saying. And onto the INFINOX MT5 platform now. Just starting very briefly with the dollar index, we can see this sharp move higher on Friday, but it is now into the realms of resistance around that 92.80 up towards 93 figure mark. And I think it'll be interesting to see if the dollar index can break through that barrier. And you look at that, we're looking at euro dollar as effectively a similar chart, which is the opposite, where euro dollar is testing this support around 17.50. Now that is a really important level, that if it starts to close decisively below that, you're looking at 117 big figure as a big test. But you can see this downside move just starting to settle down a bit. Momentum indicators, yeah, they're corrective, and certainly Friday's sharp move to the downside is a key negative candle, but effectively you need to see this starting to close decisively underneath all this support around 17.50. We've not really yet got rid of that. And I think if euro-dollar can start to settle down and maybe build back higher again, it'll be interesting to see how this reaction goes, because it's a little bit stretched on the 4-hour chart at the moment. Euro-dollar, as I said, closing below 17.50, opens that 17 big figure mark to the downside once more. And that would be the risk, I think, on a close below that. But essentially, we're still seeing the market trying to settle down. And the question is this the start of a renewed downside move to test 17 big figure? I'm not quite sure yet. I think it's going to see a bit of a choppy phase for now. And if it can start to then reclaim above 17.80, you could maybe start to see that recovery building once more. And on the gold chart, big flash crash overnight. Saw downside move actually. If I show the 30-minute chart, you can see this downside move on the payrolls report started to settle down into the close on Friday. And then as markets opened Sunday evening for the Monday session in Asia, this sharp downside move, lack of liquidity, and Japanese public holiday as well, so sharp move to the downside on thin markets, but it started to reclaim that. But can it get back above 1,750 bucks is the question. Big resistance overhead now, 1750 to 1765. Can it get back above that? If it fails at 1750, you'd be looking at that probably rolling over again. But again, I said that dollar resistance coming up, and that would suggest that gold could start to find some support. So it'll be interesting to see how the market settles down on this around that 1750 mark. And finally, S&P 500 futures. Well, we're quite a long way back there, so we just zoom in a couple of into the ticking to all-time highs, but just rolling over a little bit this morning. It's a bit tentative, I think, that move. And you can see that on the 4-hour chart, bit of a tentative move to all-time highs. There is some good support around 4,400 to 4,415, where these old breakout levels are. And if the market can now start to build from that support again, you could be looking at higher. It's already had a nice unwind back towards that sort of 50 area for RSI, but it'll be interesting to see if it can continue high. I think there is still further upside in this move, but essentially what we do tend to see is these little consolidation phases, little tentative move up to all-time highs, and then quite often you see this sharp corrective move on a near-term basis before the next leg higher. So that would be the risk here, I think, for S&P 500 futures. We do get the possibility of another downside move back towards the uptrend before starting to move higher again. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where we'll be looking ahead to that US inflation data. So I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.